Good evening. Come to this paragraph 4.1.2. So right now the topic is separating the component of a contract. In case if a contract has multiple element, there is a lease element also, maintenance service also, or any service or any other asset, then in that case what we'll have to do, we have to separate them, because the lease component part will be accounted as per this standard, whereas the other component like maintenance services will be accounted as per the other respective standards. So the right to use an underlying asset is a separate lease component if, now how to check whether it is a separate lease component? If the lessee can benefit from the use of the underlying asset. So this point you will keep in mind while solving the problem also. If the lessee can benefit from the use of the underlying asset on its own or together with other resources that are readily available to the lessee. Okay. Readily available resource means those resources which can be easily acquired from the lessor or other supplier. Okay. Or the lessee has already obtained the list from the lessor or other transaction or events. So in short, these benefits can be used on its own. Like suppose if you buy a car and maintenance service, so that car is separate from maintenance service because it can be used on its own. But if there are multiple components in a machinery and this together make the machinery run, now this depend on each other. Therefore, in this case, you cannot separate each component and it will be accounted as one. So if the assets are integrated, the components are integrated, interrelated, so that you cannot use it, okay, without the other, then in that case, don't have to separate. So that is the next paragraph. If the underlying asset is highly dependent or highly interrelated, then you don't need to separate. But if it is neither highly dependent nor highly interrelated with other underlying asset, then you will separate. I think we took the example of this pneumatic hammer and air compressor also. A pneumatic hammer may require an air compressor, but if it works with any air compressor, then you need to separate them. But if it works only with a specific air compressor, then there is no need to separate. In contrast, next paragraph, a contract for the hire of two interdependent items of equipment that have been specifically configured. Specifically configured means to work in unison. Two interdependent equipment you have purchased, but they are configured. What is that? One cannot work without the other. To work in unison so that neither item can be readily substituted. In this case, the contract is likely to be considered to consist of only one lease. Okay. Now, even though separate lease components are identified, if the lease components have similar characteristic, it may be possible to account for them as a single portfolio under IFRS. One more point we had seen in the starting part of this chapter, portfolio approach. Is it right? Suppose you have taken 2 printers or 20 printers. So even though each of them is separately identifiable, can be used independently also. But the standard says you can use portfolio approach. But for portfolio approach, they must have a similar characteristic. Okay. If you've taken a car and a computer in one contract as a lease, then can you show it as one lease? No. Then you have to show 2 lease component. See one example printed below. All these examples are important. They are directly taken from the standard. Okay. And in the exam, I have seen examples from the standards come directly. They want to see whether the student is learning or not from the standard. So identification of lease component, one small example. Lessor leases a bulldozer, a truck, and a long reach excavator. So these are the three different assets. Can you see that? And we have to check whether they can be used independently or not. So what do you think? Can they be used independently? Yes, bulldozer is a different asset, truck is a different asset, long reach excavator. They're used in mining activities, okay? Excavator. To lessee to be used in lessee's mining operation for 4 years. Lessor also agrees to maintain each item of equipment throughout the lease term. So how many components are there? There are 6 components in this. Bulldozer, maintenance of bulldozer. Truck, maintenance of truck. Long reach excavator, maintenance of long reach excavator. The total consideration is 6 lakh, currency unit. Payable in annual installment of currency unit 1,50,000. So this is a fixed payment and a variable amount that depends on the hours of work performed in maintaining the long reach excavator. So you will learn soon that only fixed components are considered as a part of lease payment. Such variable payments which depends on future performance are not treated as a part of lease payment. That I think we have not yet covered, we'll see. The variable payment is capped at means upper limit. Cap means upper limit at 2% of the replacement cost of the long reach excavator. The consideration includes the cost of maintenance service for each item of equipment also. So this 6 lakh includes the charges for leasing these 3 assets. It also includes the cost of maintenance. Okay. Lessee account for non-lease component. Now this agreement has both lease component and non-lease component. Lease component will be lease of bulldozer, truck, excavator, and non-lease component would be this maintaining each item of equipment. So now what the lessee will have to do, unless they decide the practical expedient option, they will have to separate. Okay, separate the lease and non-lease component. Lessee does not elect the practical expedient. Now this standard again gives you one relaxation. In case of such contract where you have lease and non-lease component, you need not separate also. Simply you say that on the grounds of practical expedient, practically it may not be possible to separate, it is too time consuming. The cost of finding the separate component is more than the benefit that we will get. Is it right? So that is called grounds of practical expedient. Lessee concludes that the lease of bulldozer, lease of truck and lease of excavator are each separate lease component. So these are the 3 assets because lessee can benefit from use of each of the 3 items of equipment on its own. This you have to write in the exam. Up to this may be your case study, and then they will ask you identify the lease component. So you will say these are the lease component. Why? Because each of them can be used on its own with other readily available resources. For example, lessee could readily lease or purchase an alternative truck or excavator to use in the operation. They are not highly dependent on each other. Is it right? Suppose I get bulldozer on lease, I get excavator on lease. I can arrange truck from some other party. Is it right? So therefore they are not interdependent, highly interdependent on each other. Although lessee is leasing all the 3 items of equipment for one purpose, that is engaging in mining operation, the machines are neither highly interdependent nor highly interrelated with each other. So therefore you have to account for these 3 items separately. Okay. Lessee's ability to derive benefit from the lease of each item of equipment is not significantly affected by the decision to lease or not lease the other equipment from the lessor. That means you have a choice. You can lease 1 or 2 or 3 equipments. They are not highly dependent. Suppose the lessor does not give you truck, still we can manage. We can get truck from other parties. Okay. Consequently, lessee concludes that there are 3 lease component and 3 non-lease component. Which 3 non-lease component? Maintenance service for each equipment. This example will continue in some other problem also. Okay. So first part was to separate the components. Next part will be how to bifurcate that figure of 6 lakh. That will come in a separate example. So this example is going to continue. Keep that in mind. Right there, to be continued. So that time I am not going to read the whole example again. Next paragraph. Identification of lease component that we have done. Activities and costs that do not transfer goods or service to the lessee. Sometimes we may pay some additional cost to the lessor, like administrative charges. Okay. So they will charge you for asset, they will charge you for maintenance, but sometimes they put some charge on you which neither gives you any asset nor gives you any service. But they will charge you. Like for example, sometimes they will write administration fees. Okay. So what will you do with that expense? Let us read. A contract may include an amount payable by the lessee for the activities and costs that do not transfer goods or service to the lessee. For example, a lessor may include in the total amount payable for a charge for administrative task. Now they will incur some administration cost, the lessor, but he charges me for that. I don't get any machine or service or other cost. It incurs associated with the lease that do not transfer goods or service to the lessee. Such amount payable, underline, do not give rise to a separate component of the contract. Do not give rise to a separate component of the contract, but are considered to be part of the total consideration and is to be allocated to separately identified component of the contract. So in our example, this administrative task will be allocated over separate component of the contract. Like in previous example, it was some bulldozer, truck, excavator. Assuming those are the 3 items, and we have paid some administrative cost also. So that will also be apportioned over those 3 items only. It won't be treated as a separate component of the contract. It will be allocated to the separately identified component of the contract. There is an example here also. Very good. A contract includes a lease component, that is the hire of a machine, non-lease component, maintenance. The contract also provides for an additional charge for administrative task of 2% of the amount otherwise payable under the contract. Now you don't get any asset or any service by paying this additional charge for administrative work, because these charges do not transfer goods or service to the lessee. Additional charge will not be treated as a separate component of the contract. Rather, assuming that the lessee does not use the practical expedient, because if you use practical expedient, then everything will become one only. Is it right? Then in that case, what you'll have to do, both the lessee and the lessor account for the hire and maintenance component separately, and administration charge is included in the total consideration to be allocated between these 2 components. So you will find out what is the value of this part, and administration cost will be allocated to the 2 part. That calculation you will learn in the subsequent paragraphs. Now that paragraph will come. Separating components of a contract. 4.2, is it there? Separating component of a contract from lessee's point of view. Underline the word lessee, because for lessor there is a small change. Lessor is never given the benefit of practical expedient because he is selling. So he knows what I charge for these services, what I charge for this asset. So he is not given the benefit of practical expedient. But the lessee is given the benefit of practical expedient because he will have to take time, effort, cost to segregate the one consideration over different component. Okay, but lessor does not have this option of practical expedient. He will have to segregate. He will have to segregate like we did in revenue standard, because for him it is a revenue generating activity. So he has to identify different consideration or different obligation under the contract, performance obligation, and the consideration has to be allocated according to performance obligation. So that is why I said you underline the word lessee. Rules are slightly different for lessor. For lessee, this is very easy paragraph, you already know it. The consideration should be allocated between lease and non-lease component, if any, on the basis of relative standalone price of each lease component and the aggregate standalone price of the non-lease component. What is the meaning of relative standalone price? Relative standalone price is what you would have paid if only this service I want. Is it right? How much you would have paid for it? Like this example I give you many times. If you buy a car plus free service, they call it free, but it is not free. The consideration includes. So if I have to find out the standalone value, how much I will pay if I only buy car? How much if I'll pay if I only take the services? That is called standalone prices, okay, of each component. The relative standalone price of lease and non-lease components should be determined on the basis of the prices the lessor or a similar supplier would charge an entity for that component or a similar component to separately. How much will you charge on standalone basis? If only this is asked, how much will you charge? If only maintenance is asked, how much will you charge? Now there are some more detailed guideline. If an observable standalone price is not readily available, what is observable standalone price? Market price of individual item may not be readily available. The lessee should estimate the standalone price, maximizing the use of observable information. Now this they are going into too much of detailing how the calculations have to be done. If you can't find the fair value directly, then you should use estimation, like you have learnt in the standard on fair value. Okay, there are levels of input they have given there. First you try level 1 input, if not then level 2 input, and then finally you go to level 3 input. Oh, same example has come again. Bulldozer, truck, excavator. Now we will see how to allocate the consideration. Is it right? What was the consideration in that example? 6 lakh. Somewhere 6 lakh was written there. Yes. So allocation of consideration between lease and non-lease component. So this is a continuation of that example which we read just now. Lessee applies the guidance in to allocate the consideration in the contract to the 3 lease component and the non-lease component. Several suppliers provide maintenance service for a similar bulldozer and a similar truck. So you can find suppliers providing maintenance service for bulldozer and trucks. Accordingly, there are observable standalone prices for maintenance service for these two items of leased equipment. Lessee is able to establish observable standalone prices for the maintenance of bulldozer and the truck of currency unit 32,000 and currency unit 16,000 respectively, assuming similar payments terms to those in the contract with the lessor. The long reach excavator is highly specialized, and accordingly other suppliers do not lease or provide maintenance service for similar excavators. That means observable data is available for bulldozer and truck, but not available for long reach excavator, specialized equipment. Nonetheless, the lessor provides 4-year maintenance service contract to the customer that purchase similar long reach excavator from the lessor. The observable consideration for those 4-year maintenance service contract is a fixed amount of 56,000 currency unit payable over 4 years, and a variable amount that depends on the hours of work performed in maintaining the long reach excavator. That variable payment is capped at 2% of the replacement cost of the long reach excavator. Consequently, lessee estimate the stand-alone price of the maintenance service for long reach excavator to be 56,000 and plus any variable amount. This service only this particular lessor provides, and he says for this service we will charge 56,000. What about the other three assets? Lessee is able to establish observable standalone prices for the lease of bulldozer, truck and long reach excavator of 1,70,000 for bulldozer, 1,02,000 for this truck, and 2,24,000 for long reach excavator. Now how much amount we had paid or we have to pay in that? 6 lakh. Okay, the total consideration in the contract is 6 lakh, payable in annual installment of currency unit 1,50,000 and a variable amount. So now what they have done, the lessee allocate the fixed consideration in the contract 6 lakh to the lease and non-lease component as follows. What we will do, first we'll allocate it to the respective asset. Bulldozer, how much is for bulldozer? 1,70,000. Truck, 1,02,000. Excavator, total, check. Is it 4,96,000? Yes, seems to be yes. And total consideration is how much? 6 lakh. Now this 6 lakh minus the consideration for lease component 4,96,000, total 1,04,000 will be allocated to non-lease component. Okay. Then lessee allocates all of the variable consideration to the maintenance of the long reach excavator and thus to non-lease component of the contract. Variable consideration we will not consider because it is based on future performance. Only fixed amount is considered as a lease payment. Then it says lessee allocates all of the variable consideration to the maintenance of the long reach excavator and thus to the non-lease component of the contract. Lessee then accounts for each lease component applying the guidance in the standard, treating the allocated consideration as a lease payment for each component. So now this 1,70,000 will be applicable for bulldozer, 1,02,000 for this, 2,24,000, and this is maintenance service. This is again, there are 3 maintenance service there. You will allocate over those three services. Our standard only deals with current standard lease part. So accounting of the lease part will be covered by this standard, and accounting of this non-lease part will be covered by other standards. Now we'll come to accounting of non-lease component, already discussed. Unless you apply the practical expedient, that means you don't want to split, the lessee should account for non-lease component as per the other applicable standard. Non-lease, lease part under this standard, non-lease part other standard, depending upon what is that item. The standard only deals with accounting for lease component of a contract and not the accounting for services. Then the student will ask, what is this practical expedient? This word is coming again and again. So practical expedient is nothing but a relief given to the entities, okay, from the requirement to separate non-lease component from lease component. And this benefit is given to whom? Lessee, lessor, or both? Lessee. Lessor can do it easily, because somebody who sells his product, he knows what is the value of each item I am selling. The one who buys may not know. Okay. So lessee may elect not to separate non-lease component from lease component, and instead account for each lease component and any associated non-lease component as a single lease component. In the exam, if the question gives you data, you will have to separate, okay? You can't say, I want to take the practical expedient exemption, and hence it will be treated as one only. This election will be made by the class of underlying asset. What is class of underlying asset? If you want to use this exemption, then for all the asset of a particular class, this exemption will be applied. Now sometimes a lease may have embedded derivative. A lease may have some kind of embedded derivative. Okay. Now, are you given exemption from not separating the embedded derivative also? The answer is no. First you tell me which standard deals with embedded derivative. Financial instrument. Okay. Either you can say IFRS 9 or Ind AS 109. There you have learned, I am not taking in detail the same thing again, that if there is an embedded derivative in a host contract, then embedded derivative needs to be separated from the host contract, subject to some conditions given there. Okay. Now this exemption of practical expedient is not applicable to embedded derivative in a lease contract. The relief from the requirement to separate non-lease component is not available in respect of embedded derivative that meet the criteria for separation from the host contract. So we write down refer financial instrument standard, and there we have discussed also. Let us move forward. Lessor. Next paragraph is dedicated to lessor. Underline the word lessor now. Will a lessor also enjoy the practical expedient relief? No. If a contract contains a lease component and one or more additional lease or non-lease component, a lessor should allocate the consideration in the contract by applying the revenue standard. Lessors are therefore required to allocate the consideration in a contract between lease and non-lease component on the basis of performance obligation. So, do you remember this revenue standard? Identify the performance obligation. Allocate the transaction price over different performance obligation. and recognize revenue when the control is transferred. So therefore, you don't have a choice. You are the service provider, asset provider. You will be able to identify the transaction price of each performance obligation separately. Okay. This approach is designed to ensure consistency for entities that are both a lessor and a seller of goods and service in the same contract. A practical expedient is permitted for lessees. Underline this. There is no equivalent practical expedient for lessor. Just to revise your, lessor should be able to separate component for lease and non-lease component, because lessor would need to have information about the value of each component, or at least he can make a reasonable estimate when pricing the contract. So lessor is not given that benefit because he knows how much he would normally charge for each service separately. Okay. Now one very important discussion is about lease term. You will see there are so many paragraphs on lease term because many times the lease term is not fixed. Lease term can change. Lease term can change. For example, the lessor says you take this car for 5 years, but after 5 years, if you want, you can take it for another 5 years. So should I take lease term as 5 years or 10 years? 5 or 10? It depends whether the option will be exercised or not. If the option will be exercised and that is reasonably certain, 10 years. But if the option will not be exercised or it is not certain, then we'll take 5 years in the calculation. Okay. Or suppose the lease term is 15 years, but the lessee has given an option to terminate after 10 years. Haji, what is lease term, 10 or 15? Lease term is originally they agreed that this asset you take for 15 years, but you can terminate it after 10 years if you want. Who has given the option? Lessee. 10 or 15? Depends whether it will be terminated or not. So in this example, if there is a certainty, reasonable certainty, it will not be terminated. It will not be terminated, then take 15 years. But otherwise you take 10 years. If you think that it will be terminated after 10 years, we'll take 10 years for calculation purpose starting. Afterwards again you can change. So this standard will deal with situations where after you change certain things like the lease term, okay, amount, discount rate. Now first we will see the meaning of lease term. Lease term means non-cancelable period for which a lessee has the right to use an underlying asset. So what is the lease term? Non-cancelable period. So usually you cannot cancel it, and if you cancel it, the penalty paid is very, very high. So they are called non-cancelable period for which a lessee has the right to use the underlying asset together with plus period covered by an option to extend the lease if the lessee is reasonably certain to exercise that option. Okay. So when you will solve the problem, and if the problem gives you enough hint that he is going to exercise the option of extension, this is called extension option. Then add that also in your lease term, because it will affect your number of years, means number of lease payment, discounting factor. Now when will you be certain that the lessee is going to extend the lease term? Suppose first 5 year, 1 to 5, lease rental are $50,000 per annum, and then you are given an extension option for 6 to 10 where you have to pay only $1,000 per annum, from $50,000 to $1,000 per annum, and you know that the market rent at that time will be something like $60,000-$70,000 per annum. Would you exercise this option of extension? Now, if this kind of situations are given, then we can easily say, yes, he is going to exercise that option, and my lease term will become, in this example, 10 year. But if suppose it is instead of 1,000, it is 1 lakh, then I am not reasonably certain whether the option will be exercised or not. So if the question is silent, then in this second scenario, the student will write a note that it is not reasonably certain that the lessee would exercise the option, because then he is paying the market rent at that time. So he may like to try some other asset also. Is it right? But many times it depends. This rent is just one example. There may be other factors which will also be taken into account to check whether there is a reasonable certainty that is going to exercise that option. Because suppose it's your showroom and you have already established your business in a particular location for 5 years, and then would you like to shift it to some other place after 5 years, or you would like to continue if the option is there? So maybe that location matters, and therefore it is reasonably certain that I would like to continue again after 5 years, even though it may be at a market rent. Is it right? Or you may have done some lease improvement in that asset. What is lease improvement? You have got a office, but it was empty. Then you have done some interior work, painting work, furniture and fixture you have installed, and you have an option to extend it for 5 more years. So you would like to normally extend it, because then again you have to dismantle everything, and then it does not have any value. Again you have to start at a new place. So all those factors will be taken into account. So this does involve subjectivity. Okay, as far as you are concerned, they will give you enough hint so that you can judge whether it is reasonably certain to exercise the option or not. Second is period covered by an option to terminate the lease if the lessee is reasonably certain not to exercise the option. Opposite of the first one. Okay, the lease term may be for 15 years, and you have an option to terminate it after 10 years. And if you are reasonably certain that you are not going to terminate it here, then you take 15 years in calculation. Example, that if you terminate it at the end of 10th year, you have to pay 2 times of the remaining lease rental. Would you like to terminate? That was an extreme example, but sometimes they put this condition. If you terminate, you have to pay the rent for remaining period, 2 times of the remaining period, 50 crore rupees, anything like that they put it, so that you don't terminate, because the lessor has invested his money, and many times the assets are very specialized kind of asset. It will become very difficult for the lessor to get another customer after 10 years for the same asset. Okay, so therefore they may put a termination clause. You can terminate, but there is a huge penalty, and we know that this termination option will not be exercised. If we are reasonably certain, then take 15 years that this option will not be exercised. This standard does not use the word virtually certain. It only uses the word reasonably certain. Okay, you need not be 100% certain, but at least reasonably certain. What is the percentage for reasonable certainty? At least more than 50%. Is it right? Next line. As a part of its assessment of the lease term and the length of the non-cancelable period of the lease. Okay. What is the lease term? Sometimes is a matter of analysis from the contractual point of view, contract point of view. Remember the definition of a contract. An agreement between 2 or more parties that creates enforceable rights and obligation, and determine the period for which the contract is enforceable. So dear student, in future you have to read the contract very carefully to understand the lease term, because that will impact your valuation of the asset, liability and individual year figure. Okay, so you have to see, does the lessee has a right of extension? Does the lessee has a right not to terminate from the agreement? And accordingly you decide what is the lease term. A contract is considered to exist only when it creates rights and obligations that are enforceable. Any non-cancelable period or notice period in a lease meets the definition of a contract, like these 2 points we had seen. They are also a part of the contract: extension option, termination option. Hence, they would be considered for determination of lease term. Any option to extend or terminate the lease that are included in the lease term must also be enforceable. In assessing the enforceability of a contract, an entity should consider whether the lessor can refuse a request from the lessee to extend the lease. If the lessor does not have an option, does not have a choice to refuse the extension, then in that case that option to extend period will also be considered. Okay. Then there is a note which says, if optional periods are not enforceable, optional periods are not enforceable, that is, lessee cannot enforce the extension without the agreement of the lessor, then the lessee does not have the right to use the asset beyond the non-cancelable period. Okay. And by definition, there is no contract beyond the non-cancelable period plus any notice period if there is no enforceable rights and obligation existing between the lessee and lessor beyond that term. So this standard goes into detailing of guidelines, how you will apply the standard. As a student, you can avoid all this micro detailing paragraph, but it is better that you should know it now. You are about to become a professional. Okay. A lessee's lease is no longer enforceable when the lessee and the lessor, one more paragraph, interesting paragraph. A lease is no longer enforceable when the lessee and the lessor each has the right to terminate the lease without permission from the other party with no more than an insignificant penalty. So if a lease can be terminated by paying insignificant penalty, then that period beyond that will not be considered. Okay. Because many times, like in your case happens in your offices or in your residential flats, you have to give 1 month notice or 1 month lease rental, and you can easily cancel that lease. Is it right? What is the beginning of the lease term? That is, from where will your accounting begin? When would you bring the right of use asset and liability in the books? From the commencement date. From the commencement date. Lease term begins on the commencement date, which means not on the inception date. Commencement date. Sir, what is commencement date? Commencement date when the lessor makes the underlying asset available for use. Okay. Inception date, yesterday I told you, the date when you enter into a contract or the parties commit to principal provisions of the contract. But then it may take some time before the asset is made available to you. You may enter into agreement on 1st March, but the asset may be actually made available to you on 1st of April. So 1st March may become inception date and 1st April will become commencement date. So my asset liability will be brought into the books on commencement date, 1st April. Depreciation will be provided from commencement date. So what is the significance of commencement date? It is the date on which the lessee initially recognizes and measures the right of use of asset and lease liability. So on this date, we will learn the accounting part that we have not yet come across. You will calculate the present value of the amount payable, fixed amount payable, which we have seen, or we will see also again. Fixed amount payable, take present value. Pass the entry, right of use asset account debit to liability account. Is it right? So on this date, we will recognize the right of use asset. In this chapter, we will use a new term called right of use asset in the books of lessee for all the leases which we are going to capitalize, except short-term leases. Is it right? And we'll also write a corresponding lease liability. It is also the date when the lessor recognizes asset held under a finance lease in its statement of financial position. Lessor also recognizes net investment in the lease on commencement date. In the books of lessor also will pass one entry. Okay, net investment in the lease account debit to bank or to sale, whatever, depending upon what he does. Okay, so this is the date when assets and liabilities are recognized. Lessor also recognizes the amount receivable from the lessee on commencement date. What is the difference between inception date and commencement date? Okay, inception date is earlier of the, underline earlier of the, means there are two dates, you will take the first one. Earlier of the date the lease agreement and the date of commitment by the parties to the principal provisions of the lease. It is the date on which an entity evaluates. Now, what is the significance of inception date? On the inception date, we have to determine whether it is a lease. On the inception date, we will read the contract and we will see first whether the contract is a lease contract or whether the contract contains a lease contract. We will not debit or credit on this date, but will identify the lease contract on this date, if it contains the lease contract or not. And for lessor also, what is the significance of inception date? This is the date when he will decide whether it is an operating lease or a finance lease on the inception date. Therefore, although important assessments are made at the inception date, what is assessment? Whether it is a lease or not, whether it is an operating lease or a finance lease. Remember, the asset, liability, income, expense resulting from leases are not recognized in the financial statement or measured until the commencement date. So when will you bring the assets and liability into the books? What if there is any payment made between inception date and commencement date? That will also be added to the asset and liability. It will be adjusted in asset and liability. Okay. A lessee, what is the significance of inception and commencement date? Let us see. A lessee does not obtain and control its right to use the underlying asset until the commencement date. When you get the right to control the use of the identified asset? On commencement date. If I don't give you the asset only, how would you determine the use of that asset, direct the use of that asset? So my accounting begins on commencement date. Before that date, the lessor has not performed under the contract. From the lessor point of view, see, continuously that revenue standard is also working in the background. In the revenue standard, it said, you will recognize revenue when the performance is complete. Control is transferred, but you have not transferred the control of the asset. So therefore, before the commencement date, control is not transferred and hence accounting does not begin. Although lessee may have the right and an obligation to exchange lease payment for a right of use asset from the date of inception, the lessee is unlikely to have an obligation. Normally, they don't have to pay anything. till you start using the asset. Normally it is written, there is an unlikely situation that lessee will have to make lease payment before the asset is made available for use. But yes, sometimes, let us say there is a payment. Now what do I do? If such circumstances arises, that is the entity is required to make payment for the right to use the underlying asset before the commencement date, then they would also be included in the lease payment. Now we'll take one example. In this example, we have to identify what is the inception date and what is the commencement date. Okay, you can easily guess that. Company X is planning a major expansion of its oil production capacity beginning in 20x2 in order to ensure sufficient shipping capacity is available when production increases. Company X enters into a lease contract on 1st January 20x1, underline. So can you guess what can be this 20x1 1st January? Inception date. For rail cars to ship the oil. The rail cars will be made available to the company on from 1st July. What is 1st July 20x1? So we can call it as a commencement date. Company X does not expect to use the rail cars for its own shipping purpose until 20x2, but it may consider other options. For example, to rent out the cars to other producers in the second half of 2000x1. Is it right? Because the asset is available for use now, either you use it or you sublet it. Assuming sublet is permitted under this contract. Okay. The sole reason for entering into lease contract in 20x1 is to ensure that the rail cars will be available to the company X in 20x2. Now see how will you present the answer. The inception date is 1st January 20x1 or any earlier date on which parties committed to the principal provisions of the lease. Bond? Contract, which is not mentioned in this problem. So 1st January only. This is the date on which X evaluates the contract to determine whether it contains a lease, and assuming that having regard to requirements set out in this standard, that means all conditions of lease are fulfilled, that we have seen in the first lecture. There must be an identified asset. The supplier should not have substantive substitution right, and the lessee has the right to control the use of the asset. All this will be available from 1st July 2000x1, that is the right to control the use of rail cars. Company X determines that the contract is a lease. In fact, each of the rail cars, now they are going to take many rail cars, each vehicle may be considered as a separate lease component. We are not given how many rail cars. However, it is assumed that company X applies the practical expedient and accounts for the portfolio of the leases together because they are similar asset taken from the same party. Okay. And therefore, as a practical expedient, I will treat them as one single lease and do the accounting. The lessor makes the rail car available for use on 1st July. Company X has the right to control the use of the rail cars from that date. Although Company X does not intend to use the rail car from this date, it has the right to determine how and for what purpose. Remember, how and for what purpose? You should have that power. How and for what purpose the rail car will be used from 1st July if the Company X chooses to store the rail cars rather than use them for a period of this time. This is a demonstration of control over those cars. Now, how beautifully they have concluded that 1st July is the commencement date of the lease. Because you have now the power to decide how and for what purpose. They have also written, if you want, you can just store it also and not do anything. but you can decide that. And the asset, liability, income and expense resulting from lease are recognized and measured from that day. And what about the depreciation? Now you have learnt in many standard, depreciation begins once the asset is available for use. Asset is available for use. Actual use is not necessary. The depreciation will commence from 1st July, that is uh, when the asset is available for use, even if the rail cars are not used until 2002. Okay, so they can create many questions from this case study. Identify inception date, identify commencement date, okay, identify the date from which depreciation will begin, justify why 1st July is the commencement date, etc. Okay, rent free period. Lease term includes any rent free period provided to the lessee by the lessor. Now suppose the question is like this for us to solve the problem. You took a lease on say 1st January 2020. Next 2 year rent free. There is nothing free, but they will call you, don't have to pay anything. And then you pay lease rental of 5 million, 5 million, 5 million over the next 4 years. What is my lease term? Lease term 6 years. 1, 2, 3, 4, 5, 6. So I will calculate the present value of this. This will give me right of use asset and liability value. Next 2 year what will happen? Only the interest will be accounted. No payment entry will be made. Okay, but that calculation will involve 6 year. Calculation will involve one more important paragraph tick mark, which I am just going to summarize. If the lessor has a termination option, the standard says that should not be considered. Whose termination option should be considered? Lessee. Okay. But if the lessor has a termination option, that should not be considered. Ignore it. If only a lessor has a right to terminate a lease, the non-cancelable period of the lease includes the period covered by the option to terminate the lease. And then why they have given this justification here. A lessor's right to terminate a lease is ignored. Underline. Afterwards, when you solve a numerical question, then check who has the right to terminate. If lessor has a right to terminate, ignore when determining the lease term, because in that case the lessee has an unconditional obligation to pay for the right to use the asset for the period of lease. Lessee has an unconditional obligation to pay for the right to use the asset for the period of lease unless and until the lessor decides to terminate the lease. We are looking at, let's say, from the lessee's point of view. Lessee will keep on paying. Lessee will have to keep on paying the lease rental. Okay. So in that case, the right to terminate of the lessor will not be considered because he has an unconditional obligation to pay for the right to use the asset. This principle applies to the determination of lease term for the lessor as well as for the lessee. There is no assessment regarding whether the lessor is reasonably certain not to terminate, as in the case of lessee termination option. So the standard says termination option would be only looked at from lessee's point of view. If the lessee has a right to terminate, check whether he will terminate or not. If he is not going to terminate, take the period, full period. But if it is possible he will terminate, then he will take up to that period only. Lessor's right to terminate will be ignored. And then assessment of lessee extension and termination option. Little bit repetition here. If the lessee has the right to extend or terminate the lease. Now we are trying to understand what is the lease term. Lessor has a termination option, ignore. Lessee has a termination or extension option, and these are enforceable rights and obligation, then this will be considered. Okay. Only what you have to see, that there is a reasonable certainty that the option will be exercised in case of extension option, and there is a reasonable certainty that the option will not be exercised in the case of termination option. Extension option, what you have to see, option will be exercised. I gave you some example. Rent is 50,000, now you can take it for 1,000. Or maybe the location of the asset matters. You have done some lease improvement. And similarly for termination, the penalty may be so much that it is better not to terminate only. When would you do this assessment? This assessment of reasonable certainty, first you will do at the commencement date. Later on again you will do it. Suppose it's a 10-year period. Right now I think I will not extend. But after 7 year or 8 year, I may decide to extend also. So the standard will deal with those kind of situation also for accounting purpose. Is it right? And you'll find there are some numerical questions on that. Then I have to take new period, new calculations. So at the commencement date, today I have to decide whether there is a reasonable certainty to exercise the extension option, or to exercise an option to purchase the underlying asset, or not to exercise an option to terminate the option. One more line they have added now. Some lease contract gives you an option to purchase, because the lessor also knows that after 10 years of use, it will be difficult to find a buyer or another lessee. So some lease contract gives you an option. If you are going to use that option and buy the asset, then my lease term ends there only. Is it right? In making the assessment, the entity considers all relevant facts and circumstances. In your notes, I have given below lot of facts and circumstances which you will read today as homework. Okay. Facts and circumstances that creates an economic incentive for the lessee to exercise or not to exercise the option. Next few paragraph deals with all those circumstances which the lessee looks into to decide whether to extend or not, terminate or not, buy or not. Is it right? So will you read this paragraph today? Say yes. Example like relocation cost, negotiation cost, cost of identifying another underlying asset suitable for lessee's needs, cost of integrating a new asset into the lessee's operation. So this next few paragraphs are application guideline, where they will help you to understand when would you like to exercise your option. For accounting purpose, not very important, but yes, for practical application, these next few lines are important. Immediately jump to next paragraph. 5.7. First you promise that you will read. Say, I promise. Nobody said that. Okay. You promise. Okay, I'll appear on your behalf. Do you agree? Yes, now everybody. But I will not take that chance again. Reassessment of extension and termination option. You ask me to appear for CP exam, I can try. But not this one, huh? Reassessment of extension and termination option. So the standard knows that what we had thought on the date of commencement might be revised. Okay. For example, initially we may have decided not to extend. 15 year is the lease term and we have an extension option of another 5 year. But you think after 15 year what will happen, we don't know. So first we have not considered that. But once we approach that 15 year and then we find that we might use our extension option. And same thing for termination option also. Initially we might have decided we will not terminate, but the business volume has grown up. That asset is not sufficient to meet the growing volume. So we might decide to use the termination option. So therefore the standard says reassess extension and termination option. A lease should reassess whether it is reasonably certain to exercise an extension option or not to exercise a termination option upon the occurrence of either a significant event, like for example, you have acquired another company, significant event, and because you have acquired another company, you need a bigger space now to accommodate those employees also. You need more machines, bigger machine for your activity, or a significant change in circumstances. Business volume has gone up. That is called significant change in circumstances. Technology might have changed. You may not like to continue with that asset. Technology. Taste and fashion of people have changed. That is change in circumstances. That is within the control of the lessee and affects whether the lessee is reasonably certain to exercise an option or not to exercise an option previously included in the determination of the lease term. In short, you have to reassess your extension and termination option. Okay. Now in your book, I have again given some example of significant event or change in circumstances. One or two I will read. Significant leasehold improvement. Significant leasehold improvement not anticipated at the commencement date. Second, a significant modification to or customization of the underlying asset that was not anticipated on the commencement date. Later on, you must have done lease improvement, some modification, customization. So now that may affect your decision to extend or not, terminate or not. Revision of the lease term. An entity should revise the lease term if there is a change in the non-cancellable period of a lease. For example, the non-cancellable period of the lease will change if one of the following occurs. The lessee exercises an option. Same thing, continuation. That was not previously included in the entity's determination of the lease term. And the lessee does not exercise an option previously included in the determination of the lease term. Both. You might have earlier considered an option to extend. Now you don't want to consider. You might not have considered an option to extend, but now you want to consider. An event occurs. An event occurs that contractually obliges the lessee to exercise an option not previously included in the determination of the lease term. Okay. The contract may specify some event, and because of that, you may have to extend or exercise the option. Like contract may say if there is a merger, then we'll have to extend the lease term, something like this. Any event. An event occurs that contractually prohibits the lessee from exercising an option previously included in the entity's determination of the lease term. Okay. That is also possible. The agreement may say if you take a loan beyond a certain amount, then the lessee is not allowed to extend the lease option. This is just an example. Any such event, and the agreement mentioned that if it happens, the lease term cannot be extended. Like this. So in this situation, we have to revise the lease term. Now, does it affect my accounting? Of course, yes. If I increase the lease term, more lease payment will be made than what I had originally estimated. If I reduce the lease term, less lease payment will be made. So if I have to pay more lease rental, my liability towards lessor will go up. If I have to pay less lease rental because I have reduced my lease term, my liability towards lessor will come down. So I will have to do the recalculation again when there is a revision in the lease term. I will see now what is the remaining amount payable to the lessor over the remaining or revised lease term. Okay, what is my existing liability? And then some adjustment will be done in the liability account, in the asset account, and in the profit and loss account. But that calculation part, for a minute, wait. Very interesting calculation coming your way soon. Now next is the lease term may also be revised following a reassessment as to whether an extension option is reasonably certain to be exercised or termination option is certain not to be exercised. Although such a reassessment does not affect the non-cancelable period, it affects the total lease term. It affects the total lease term, non-cancelable period plus this extension or termination option period, comprising of non-cancelable period and reasonably certain extension periods. So this is about lease term. While solving some numerical question, one has to check what is the lease term. It is non-cancelable period plus option to extend or termination option. That option not to terminate, but that has to be reasonably certain. Only option with the lessee you have to check. The termination option with the lessor has to be ignored. Okay. So that is the summary of the previous few paragraphs. Now we'll come to the main part, number crunching. Okay, you are the accountants. You don't like this theory, yes or no? You like? Okay, then you are a rare exception. But now you have to be ready with your calculator. Lease payment will include what? Exclude what? What it includes and what it excludes. For example, if the lease payment is like this, the lessor provides a space in a, say, commercial complex, and he says your rental will be 5 lakh plus 10% of sale. 5 lakh plus. So what will be my lease payment for the purpose of this chapter? 5 lakh plus 10% of sale or only 5 lakh? Plus 10% also. Why? That is based on future performance. Okay. That is not to be considered because that is dependent on future. So variable rent are not part of lease payment. 10% of sale is a variable rent. If that event occurs, then we'll pay that rent. If that event does not occur, then we don't pay the rent. So the standard says ignore the variable rent, but not all. There are some variable rent which will be considered also. For example, the lease payment is like this. We'll start with 1 lakh and it will increase with the consumer price index. So consumer price index next year is 10% more than previous year. Then you'll have to pay 10% more. So that will be considered. Okay. So some variable element which may look like variable, but in substance they are like fixed only. I have to pay. Liability is certain. Amount is uncertain. They are called in substance fixed payment. Even though they are variable, they will be considered. Okay. So practically this again will be a big challenge in the years to come. How to consider which amount to be considered and which amount not to be considered. Lease payment can be like this also. 5% of sale subject to minimum 1 lakh. 5% of sale subject to maximum 1 lakh. Okay. 5 lakh plus 5% of sale. First 5 lakh sale 10%, next 5 lakh 20%. So different combos are possible. And then one has to identify for accounting purpose which amount I need to consider. So one possible question from this area, they may give you lot of calculations, figures, and then you have to choose the right ones. So let us just read slowly. This is important paragraph for solving problems. Lease payments means payment made by a lessee to the lessor. So it should be only payment made to the lessor. Payment made to government for municipal taxes is not a part of lease payment. Payment made to insurance company for insuring the asset is not lease payment. Payment should be to the lessor relating to. Now payment should be for what? Relating to the right to use an underlying asset. If you are making payment to the lessor but for maintenance service, again that is not a lease payment. Payment should be towards right to use the asset. Okay. That means other payments can be made, but they are not lease payment for the purpose of my present accounting during the lease term. And payment should be restricted up to what date? Lease term. Okay. Payment made beyond the lease term we will not consider. And lease term we have discussed in detail today. Now what will be included? If you have a pen, underline, red pen, these are what we will include in the lease payment. 5 items. Which 5 items? One is fixed payment, that you know. Including in substance fixed payment, underline. In substance fixed payment means they are unavoidable payment. The liability is fixed, but the amount is uncertain. Less any lease incentive. Now underline this also, lease incentive. We'll discuss lease incentive in the next paragraph. Lease incentive means payment made by lessor to the lessee. Okay. Payment made by lessor to the lessee. Sometime what the lessor does in order to bring a customer, that you ignore your previous lease. Okay, you surrender your previous lease. You take lease from me and I'll give you 5,000 rupees discount. Okay. So that is lease incentive. So that will be deducted. That will be deducted in calculating the lease payment, because it's like a cashback that is giving. Okay. You students are more familiar with cashback. Then variable lease payment. Then variable lease payment only which depend on an index. Like for example, inflation index, CPI right now, consumer price index, which is mentioned below also, or a rate, for example, LIBOR. So lease rental will be increasing as the LIBOR changes. Lease rental will change as the London Interbank offer rate. It's a benchmark rate for interest. So as the LIBOR changes, the lease rental will be paid. So we'll start with 1 lakh rupees. And if the LIBOR increases to 5% next year, on 1st January we'll see what is LIBOR, 5%. So next year lease rental will be 1,05,000. Again we'll see next year what is LIBOR, 2%. So 1,05,000 plus 2% would be the lease rental for the next year. So here the liability is there, only as this 5 or 2% would change, my lease payment would change. The exercise price of purchase option, underline this also you will add. Exercise price of purchase option if the lessee is reasonable certain to exercise that option. This is also a very regular feature in lease arrangement, especially long-term leases. What they do, they allow the lessee to use the asset for many years. And then afterwards they say that if you want to buy the asset, you can purchase the asset after the lease term. Because lessor also knows that it's very difficult to sell that asset after 10 years. Finding another customer, another lessee would be very difficult. You only buy. And then you are normally given an option price. And that option price is very attractive. What is attractive? Suppose a Mercedes car is given on a 10-year lease, and after 10 years you can purchase it for 1 lakh rupees. So will this option be exercised? The exercise price if the lessee is reasonably certain to exercise that option. To think, some subjectivity is there, I can't help it. Most probably this will be, yes, we will exercise the option. A Mercedes car which is 10-year old for 1 lakh is still a good deal. If you don't want to use it, you can even sell in the market and make some profit out of it. Is it right? So then you consider. But if it is not certain, don't consider. The next is the payment of penalty for terminating the lease if the lease term reflects the lessee exercising an option to terminate the lease. So suppose you have an option to terminate the lease, and while discussing the lease term, you may terminate the lease. You may terminate the lease. Then you will take the penalty payment for termination option, otherwise not. And then, in case if the lessee has given residual value guarantee. Oh, this we had studied in the old lease standard also. What is residual value guarantee? That is, after some years, the lessee pays a lump sum amount. Okay, promises to pay a lump sum amount to the lessor. He tells the lessor, don't worry, I have used your asset, I'll give you some fixed amount, lump sum amount, guaranteed amount. So that also you will add. Okay. So sometimes what happens in case of lease arrangement, the lessee pays a lump sum amount also towards the end of the asset. That also you will consider. So number one, fixed payment, including in substance fixed payment. In substance fixed payment means they may not be exactly fixed. They may look like variable. In form they may be variable, but they may be practically a fixed only. Is it right? Second, variable payment but linked to the index or the rate. Third is exercise price in case if the option is certain to be exercised. Termination option penalty if it is certain that, reasonably certain that option will be or the lease will be terminated, and the residual value guaranteed by the lessee. Okay, these all we will consider, minus any lease incentive received from the lessor. So there is a problem on lease incentive also. So lease payment include optional payment payable after the non-cancelable period if it is reasonably certain that the option will be extending beyond that period, and exclude variable lease payment linked to future performance or use of the underlying asset. Okay, because these are contingent. In the previous standard they had called this contingent rent, which is dependent on future performance of the asset, like sale into some percentage, okay, or number of hours run into some rate. So those will not be considered. Those are called contingent rent in the previous standard. This standard does not use the term contingent rent. And optional payment payable after the non-cancelable period if it is not considered reasonably certain that the lessee will extend the lease beyond that period. Okay. Now suppose 5 year is the lease term, non-cancelable lease term, and an option to extend it up to 10 year. Option to extend it up to 10 year. Now, we are here right now. If you are reasonably certain that you are going to extend the option beyond 5 year up to 10 year, then lease payment will include 10-year lease payment. In calculation, compute the present value of whatever lease payment you will make up to 10 year. But if suppose we are now here, exclude, we are not certain that the option will be exercised to extend, then in my initial calculation, I will take only up to 5 years. Is it right? Now we'll take a break.